out there in podcast world. Hope you're having a great day. You're listening to the Service Business Mastery Podcast. I'm your host, Tersh Bliss. I always forget to say that. I just assume people know that I'm Tersh. But today's episode, we're going to talk accounting, numbers and crunching numbers. And just, it's going to be a boring episode. So you might want to just turn it off. No, I'm kidding. No, we're going to do the exact opposite. We're going to talk about it's exciting. Today we have Spencer Sheinin. Sheinin. I say it.
Sheinin, you got it. Sheinin, yeah.
Okay. I always write it down grammatically, so it sounds, and then of course I'll hack it up every time. But I'm super excited because Spencer has a book out, and when this episode is released, or when you're listening to it, we may not even have the COVID issue anymore. But his book was released a few weeks before the pandemic started and spread. So it was great for a little bit, and then everybody's attention went elsewhere. And but I'm excited to learn more about the book, and then also to talk a little bit about ultras. And if you're not familiar with an ultra, you're about to learn about an ultra and the glutton for punishment. We were talking before, my leverage every week whenever I have my group meetings with my team is if I don't meet my goal, I'm going to run a mile. And so that's my motivation to get my goals completed each week. Right. So I couldn't imagine running 100 miles and swimming and biking and all that. Did you do a triathlon also?
I've also done Ironman, but yeah, before the show we were talking more about just the ultra marathon, so just the running side as well. Yeah, both.
Well, anyways, welcome to the show, Spencer.
Right on. Thank you, Tersh. Nice to meet you.
Absolutely. So tell us.
This is going to be fun. I can already tell it's going to be fun because when people are talking, either we can find a way to understand our numbers better and actually make them more interesting and fun. I won't sound like a normal accountant, I promise. But when people hear about the ultra thing, they love talking about that too. So I'm happy to go wherever we end up here.
Well, this is really cool. A little bit about your background. You're a CPA.
Correct.
But you're not a normal CPA. You're someone who can talk to people in the trades and have a normal conversation, and our eyes don't glaze over when we talk. So we're good with that.
That's the
So
goal.
what's your background? How did you get into this?
Yeah. So I am a CPA. I consider myself an entrepreneur first. So I way back in the day, I did my CPA and I ran for the door as soon as I had my degree. Mm-hmm. And I actually became an investment banker for a year as well. So I was doing stuff, we were doing financings and mergers and acquisitions of huge public companies. Mm-hmm. And believe it or not, I ran for the door after that as well. I had enough of working. I back in this, I was in my early 20s at the time. And back in the day, I had a roommate, and the joke was, I'd get up, I'd leave, I'd throw the paper down the hall. His room was down the back, and that was his alarm clock. And I'd get home after he was in bed. So I was literally I'd be at work by 6:30 and I'd be home at about 2:30. And I'm like, enough of this. So
yeah. That's the birds.
Yeah. So I got out of that, and I actually ended up, through a long story, which we won't get into here, getting into my first business was actually a manufacturing business. We made skincare products, believe it or not. And one of them was hand sanitizer. So if I was in that business now, I'd be killing it.
Banking it.
Instead, I'm in accounting. And that sort of evolved into, I had a business partner there, and we actually got into construction. So I'm pretty familiar with the trades business. We did high-end custom homes in Vancouver. It was a business he'd had his whole life.
Wait a minute. You can't slip that. You can't sneak that one by me. You
All right, go ahead.
From hand sanitizer to construction.
Yeah.
In the same business. How does this transition?
So no, it was a different business.
Oh,
so
okay.
My partner, so through, again, a long story, which you don't need to get into here, but I connected with my then business partner, and we went out and acquired this skincare manufacturing business, and we owned that together, and he still had the construction business. And I knew that going in, and I was young and not very intelligent at the time. And he was about, 12 or 14 years older than me, and had quite a bit of business experience, but he didn't have kind of the office side, the accounting side, the finance side that I did. So we thought it was a really great partnership, and it turned out to be an amazing partnership. And then when his partner out of the construction company retired, I mean, that was probably 6 or 7 years into the manufacturing business. He invited me into that. He said, can you help me come in and just put the systems and process into place into this business so it's not quite as chaotic.
That's
so
really cool.
we were partners in 2 businesses together at the same time.
Okay.
And
because that
I'll slip
was
one
a
more
funny
in.
transition. Okay.
Yeah. I'll slip one more in, and I'll
ahead.
give you a little more before I get there. Is I was also involved in a cold storage business. So we had 4 facilities in Washington State. So it's just basically refrigerated warehouses where, being in the Pacific Northwest, a lot of fish, as you could imagine, beef, butter, those types of things. And interestingly, carbon fiber, some types of carbon fiber have to be kept at a certain temperature before they're manufactured.
Oh, wow.
That's how they actually get their rigidity. I'm not technical enough to understand that. So we actually had one facility almost fully dedicated to carbon fiber.
That's crazy.
So somehow I found myself involved in these 3 businesses, and just for scale, I've had businesses anywhere from a few employees, but in total, I've had over 300 employees now. So I've had kind of the range of size of businesses, never any monster businesses. I don't really understand billion-dollar businesses. How do you manage 5,000 people? That's not my gig. Some people are good at that, not me.
Most people that are listening to this, or a lot of people that are listening to this, are going to be like, how do you manage more than 10 people? So
yeah, well, there's that. I'll answer that when I
kind of is
a
monster business.
Yeah. So I've had all of those, and then 2008 happened, and there was a real challenge in each of those. And over the next number of years, we consolidated, changed, did the things we had to do, and ultimately, around where are we now? I'm going to say around 6 years ago or so now, so my partner and I split up the businesses. We each took one of them. He took the construction business. I took the manufacturing, which was the right call. We're still friends today. It was just the right thing at the right time. Excuse me. And then we sold the cold storage business to a company that was buying up a bunch of the small independent ones. We're in the cold storage world, even with 4, we were small independent. And I kind of was like, what do I do? Like I've exited these businesses. Some went really well, some went not so well, every good entrepreneur. I've had some wins and some losses. And, I was at a point where, I'm 46 now, I was 40-ish. I'm like, A, I don't really want to retire. And B, I'm not at the point where I actually can. I still have to work. Even if I was, I would still want to work.
Right.
And I was actually at a speaking engagement, before the show, we were talking about different speakers we've seen. And one of them was a financial speaker. He's really good. He was really good. But really technical. And so I'm a CPA, I'm in the audience, and I was like listening super intently. Okay, I got it. And the rest of the room were other entrepreneurs, and, some were trades, some were creative agencies, some were exactly straight over their head. And at one point, there's a bit of a joke. It's kind of funny. I tell the story in my book where I actually corrected them, and everybody started laughing because, they weren't even keeping up. And, just because I'm a CPA, I could, and I'm numbers inclined, right? Like numbers have always come pretty easy for me. I know creativity does not. So we all have our strengths. And everyone laughed. And after the talk, one of the other entrepreneurs looked at me and he said, hey, can you put this in my business for me? And I was just like this light bulb aha moment where I'm like, wait a second, this stuff is critical. Entrepreneurs know they need it. Business owners know they need it, but they don't know how to do it. They don't know how to get this actually to work in their business. They don't even know what questions to ask. They don't know where to start. They don't know any of that. 100%. So I just had this thing. I'm like, wait a second. I am a CPA. I understand all this stuff, but I've also been an owner. I understand we're being pulled in a million different directions. We don't have time to sit down, and a lot of owners aren't going to want to even learn this stuff. So I was kind of inspired to create, we'll call it a system, if you will, just to help entrepreneurs really understand their numbers in just a simple, intuitive, straightforward, I don't have to be an accountant way. And I think a lot of accountants actually fail entrepreneurs by how they deliver, here's your financials and run away. And entrepreneurs are like, I don't even know what to do. Yeah. So that's how I got to be doing what I'm doing now. Yeah. That's
really, really cool. So
long story, pardon me for the run-on sentence there.
No, you're good. So, but I'm computing the math in my head. It was about 6
Yeah.
years after you started doing this before you wrote the book, or before it was published or released, basically ish, right?
Yeah. I took about a year and a half where I didn't really do a whole lot. I was trying to figure out what was next in my life. I've never really taken time off like that. It's
Mm-hmm.
always just been go, go, go from one thing to the next, like any good entrepreneur, right?
Oh
Or
yeah,
there's no
guilty.
downtime. Yeah, exactly. And so I said, this time I'm not going to rush into something. And part of my getting out of those businesses, I didn't love what I did. And, that to me, if you don't love what you do, it's like, it was time for a
Why not?
change.
Mm-hmm.
And so that took me a little bit. And, the other real funny story is I got into just doing some advisory work. There's actually a pretty robust tech scene in Vancouver. And I just kind of got into the scene. I met somebody else, and I just became an advisor because although I wasn't a tech expert, just, core business foundational stuff I've been doing now for 15 years at the time.
Mm-hmm.
And a couple of them kept saying, well, will you be our CFO? I'm like, I don't want to be your CFO.
Yeah.
But, for a small tech company to have a CPA, somebody who's got a decent resume on their
Yeah.
team will always look good.
Oh yeah.
So I said yes. And I was just like, I can't get anything from any, like the bookkeepers, they'd ask me questions like, how can you ask me that? Like, that's bookkeeping 101.
Right.
Or I'd say, can I get this report? And they didn't have it. And so the funny part, I was on that conversation with my old director of sales from the skincare business. And I said, if I only had Anna, Anna was our old controller. I said, I could put Anna into all of these businesses. She could clean them up, and then I could do my thing as CFO. And she's like, well, have you talked to Anna? I was like, no. She goes, well, call Anna, because Anna's not happy where she's at. And I was like, oh. So I called Anna. I'm like, okay, Anna, don't quit your day job.
Yeah.
But here's what I'm thinking. And she called me 2 weeks later, said, I just quit my job. I'm like, I guess we're doing this. And
I said, don't
literally
quit your day job.
and she quit her day job. And so I was like, okay. And I called everybody I was advising. I think there was 3 or 4 companies at the time. I'm like, hey, I can't even, I'm like, for X dollars, I can take care of this, and we'll do it. And they're like, yeah, great. And literally that's how, so the business is called Shift Financial Insights. With the idea we're shifting the financial experience of the owner. And yeah, we just went in, and that's how it started. And we've built and grown from there, and, had our ups and downs like every startup. And that was, 4 years ago. And now we're kind of getting to the point where we've got things dialed, and getting reports that, I just think makes sense. Like, it's all about making it be intuitive and make it where I can actually make good decisions. Because that's really the part that inspired me, that, I think, as an owner, as an entrepreneur, like, we have employees, we have communities. While we're always trying to build our own business, we're actually impacting a lot of people around us in a very meaningful way. We have the opportunity to create great experiences for people as employees. We have a great opportunity to create great experiences for our clients. And if we don't have the right information and we're driving our business the wrong way, it doesn't matter what we do. We're just going to be stuck always. And so, I want entrepreneurs to be able to have a bigger impact, because they know, like, oh, well, every time I get this type of client, we lose money. Every time I get this type of client, we make money. Oh, well, I'm going to just go after these clients from now on. Like, it's literally that simple once you've sort of gotten the stories. And so that's what the book is about. It's about how to uncover the stories that are buried within your financials. It's about, how to completely paradigm shift your relationship with numbers, because for most people it sucks, and it doesn't have to. That's the thing. It really doesn't have to.
Yeah. So it's very true. And that statement it resonates with a lot of people. Heck, it has in the past, it's resonated with me very much. So, and I'm even a numbers person. Like, I went to school for engineering. Like, I legitimately am numbers driven person.
Yeah.
But when it comes to accounting, it's not even the numbers part that freaks me out. Even to this day, it's like, does that go above or below the line? Like, it's like, it's always that. It's like that gray area. And then of course the IRS is going to just throw me under the jail if I make one mistake, and that's how I lose sleep at night anyways. But that's the way it's just the ignorance is bliss. And I don't know what questions are the right questions to ask.
Yeah.
And
but it's not bliss when it comes to accounting. Ignorance is pain.
I know. Yeah, absolutely. 100%. It's like, oh
You know,
yeah,
and
everything's
part of
great. And
that,
then you go to do your taxes and you're like, no, it's not great. It's actually really
well,
bad.
and you know, like I kind of, a lot of that comes from, you know, like I went to school for 3 years to learn how to write, interpret, and create financials. Like it's essentially its own language.
Mhm.
And it is actually a language, and there are technical elements to it, and there are rules to it that if you don't go to school for it, it's like, how can I hand you financials and expect you to read it? And, you know, it'd be like somebody sending me a set of plans. I'm like, I mean, I can kind of look at the, yeah, I guess a wall goes there and
Mhm.
that looks
Mhm.
like a door, but you know, I mean, I couldn't do anything with a set of plans where, you know, trades know exactly. It's literally that different.
Mhm.
And yet we as accountants seem to think it's okay to hand off a set of financials and think, here you go, we did our job. And I think we haven't as accountants. So this is where we've failed.
Yeah, and I wish that, of course, we all wish that certain things were different in schooling in general. But I wish there was a course that said, "Hey, look, you're going to be dealing with a bunch of dummies. You need to dumb this thing way down. Like
Hmm.
you're at a 10, from a 1 to 10. You're at a 10. You think you're going to bring it down to a 7, and that's going to
Hmm.
be fine. You need to assume everybody else is at a 1, even if they
Yeah.
are good in the industry. They're probably at a 3. So you need to bring
Yeah.
it way down, because if you leave it at
Yeah.
a 7, you're still over a lot of people's head.
Well, and I'm going to flip that numbers around for a minute. And, you know, I actually do a fair amount of speaking on this topic as well. And I do kind of an example, and I start with, you know, on a scale of 1 to 10, how comfortable are you with your numbers, you know, in terms of, you know, they're easy and quick to understand. You're really on top, like you genuinely understand your numbers, and you have a plan of action to deal with it, and it's super intuitive. And, you know, a lot of people go like 3, 4, 2. Once I had somebody say 6, and then, you know, about a minute later, like, okay, really on a 3.
Yeah.
Um, and so it's, you know, I look at it, if people are at a 3, how do we get them to an 8, 9, or 10?
Yeah.
In that way, that's super easy because, you know, you know, I don't think it's about teaching entrepreneurs how to understand accounting. I think it's about teaching accountants how to deliver the information differently. Um,
Yeah, and I agree
so
with that.
again,
Because when you look at a P&L and nobody's actually taught you like what you're looking at,
yeah,
you it's funny when you have that conversation or overhear the conversation that, hey, you made $50,000 net profit this year, and then you're like,
mhm,
okay, well, where is it? Because my checking account does not have
yeah,
$50,000 in it,
yeah,
and so it's like,
yeah,
you know, overhearing those types of conversations are
yeah,
funny, but not funny at the same time.
hmm, yeah, yeah. And I mean, so you know that there's two elements to that as well. There's number one, are the books being done properly, right? And I would just call that the basic hygiene. Like that's the boring stuff that everybody thinks of as accounting. The hygiene, that's, you know, the invoicing, the receivables, the payables, all the garbage that nobody likes. And then you layer on top of that what I call the insights. You know, what are the stories that are buried in there? So like, what are the numbers trying to tell me that I don't know are there? So the pain is twofold. It's am I even getting it right? And I don't know how to know if my bookkeeper's doing it right or not. And
Mhm.
then, and like I said, number two, the insights. You know, what's the most important thing that I'm learning here? And you know, those to me, a good example of that, just to share, and I'll sort of tell a bit of a story. So this is one of our clients is a creative agency, so they do digital marketing, that type of thing, and and super high level conversation. You know, they had the prior year they had 97 different individual jobs that they billed for. All right, and you think each one of those you got to find, you got to win, you got to staff, you got to oversee, da 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 da. And we found that of those 97, so we'll call it 100 jobs just to make it easy, 60 of those, 60%, were what we called small jobs. So 60% of all of those transactions represented 8% of their revenue.
Ooh,
60% of their jobs represented 8% of their revenue. And okay, who's going to complain more, your big clients or your small clients?
small clients,
Always your small clients. And then
always
you're on the
small.
phone going, why am I wasting my time talking to you, my small client?
It's the
And then I got to
80/20
go fix
rule.
all these problems. right? And so 60%, and I mean, yes, the big jobs take more time and there's more effort. So it's not like a 60-40 effort,
Mm-hmm.
but you have 60 times you have to invoice, and then somebody didn't pay and you got to call, and then they're upset and you got to redo the work and whatever it is. So literally just that one story, which they didn't recognize, they put a new minimum job size in. And they just said, we're not taking job. And yeah, sure, this is a reason. This is a, you know, this is our best client. They wanted us to do it. Okay. This is the potential. This is our first job, but maybe we can get a big job. Okay. Some strategic reasons to break the rule.
Right.
Totally cool. And they switched it. And that within 6 months, they replaced all 60 of those jobs with 2 jobs.
Yeah.
Like,
Totally.
how much easier does your life get? How much easier does your
Yes.
office get? So that's just one type of story that, you know, like when you're saying you're frustrated or you don't understand, it's like, if you had that kind of direction, you know, and another kind of client, like we did the same thing, but one part of their business is where they made all their money. So all the other parts of their business, they were not making money.
Do you
And it's
ever
like, well,
see
stop bringing that.
whenever they do that? Do you ever see like it's almost a lost leader so they can get more like
Again, if it's strategic and there's a
yeah,
reason to do it, totally cool. Like,
yeah,
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 we, you know, like the digital marketing does, I don't know,
right,
an audit of your marketing for $5,000 or, you know, free
right, right,
estimate or
right,
whatever you
right.
want to call it. I'm totally cool with that if the numbers and your story inside the numbers can prove that it's working. Because if it's like, we're doing a bunch of lost leader stuff and it got us one job,
Mm-hmm.
so overall you combine the lost leaders and the one job you got, yeah, that ain't gonna work. You know, we
Yeah,
have
it's
a client where
losses.
they have a thing called a feather test, and that's like, is this job gonna work in the long term? And it's like, well, um, that's their test to know, does the loss leader make sense? So like,
Mm-hmm.
it's not just loss leader for the sake of loss leader. It's loss
Yeah.
leaders specifically figuring out if it's going to work. Yeah.
Yeah, that's a
Um,
really good point. And then another thing for the tradespeople that are listening, that HVAC, I'm talking specifically.
mhm.
One of the things that will really kill an HVAC company, they don't realize it, is warranty claims. So we have to go pick up a
Brilliant.
part. It gets billed to our account, and it could be thousands of dollars. It could be the $50,000 that should be in your checking account.
Mhm.
Could be sitting in a corner over there, and that's all the
Yeah.
warranty parts that never got taken back to get refunded and credited. So in your
Yeah.
books, you show $50,000, but you have $50,000 worth of trash sitting in your corner over there, and stuff like
Well,
that.
and, and so you put on top of that, and I promise I'm not going to get into any technical accounting here, but, you know, when I talked about the hygiene, you know, the basic getting the numbers right, this is where making sure, and by the way, I can get into kind of a few questions that your listeners can ask their bookkeeper just to get a
Yeah,
sense if
that'd
they're
be
going to
great.
be good enough. So
Yeah.
we can do that in a minute. Where I was going though is kind of what you're talking about there. There's different ways of calling it job costing, classes, whatever, but really knowing that each job, how much you make on each job, how much each job costs, and if there's warranty claims, applying it to that. And so when I was talking about that example of the ad agency that had the 100 jobs, you know, and this to me, for a lot of your listeners in trades and different where they have jobs, is probably the most powerful analysis you could do, which is a rank ordered list of jobs. And you can do this in a picture format too. I love pictures, but rank ordered jobs based on how profitable they were. So you take your total revenue minus your direct costs. And this is when you were saying, is it above the line or below the line? You got to have an accountant that knows whether it's above or below the line. I can clarify that pretty easily for you if you like. So your direct cost, your revenue minus your cost equals your profit or contribution per job. You can margin per job. You can hear it. Those words are interchangeable. And then rank order by that contribution per job. And what happens, almost without fail, you're going to have, you know, the 80-20 rule is almost always at play in business, right? You're going to look, say, you know, I did 40 jobs. Well, I made all my money on my first 8 or 10. And the rest, yeah, I made a few $100 here and there. But like, you know, if you made 50 grand, I guarantee 35 or 40K of that was made in your first 10 or 12 jobs. Like, that's just the deal. And the rest of them, you were just trading dollars. And those things like the warranty work, And not just the cost of the parts, but the labor associated with doing the warranty work.
Yeah.
All of that has to get coded in the
Yeah.
accounting system so that, and then now instead of getting handed a P&L, like imagine, so here's I love that you brought this up because this is a great illustration. So instead of here's your P&L, you're like, okay, well, I made 50 grand. Here's your P&L, here's your profitability by project. And you rank ordered by the most profitable to the least profitable. And you go down, you're like, oh, I remember that job. I remember that job. That job sucked. That job sucked. And now what you can do is start, what's common about those top 5, 6, 10, 50, however big your company is, jobs? What's similar between those? And how can I now focus my energy and attention to getting more of those jobs and less of the jobs down at the bottom? Imagine if you got rid of 3 of those jobs at the bottom and added 3 of those jobs at the top, your life would change. You're literally, and I'm not trying to sound like a motivational speaker, like excited guy kind of thing. Your life would change. Like, imagine though, like you had that, how clear that information is. And now you've got 3 more of those amazing jobs and 3 less of those crap ones at the bottom.
Mm-hmm.
Like that's what I'm talking about in terms of insights. You've got to get the hygiene right. And that's getting the right bookkeepers and the right accountants doing the right thing.
Yeah.
But then it's pulling the story out. So that warranty, sorry, you got me all excited when you talked about warranty, because I was in construction, so I know all about warranty work. And that's the silent killer.
It is. And I think about the guys that I talk to, the guys and gals that I talk to, that they're like, there's only 24 hours in a day and I'm working myself to the bone. And in their mind, they're like, okay, I priced jobs correctly. They think that they do.
Yeah.
But they don't know their true job cost. They should be like their fully loaded labor rate, what they should be billing per day or per man hour. Like they don't understand that 100%. So they're just charging what the competitor's charging, or like a little bit less than the competitor, so they can get the jobs. And then they're working constantly and no extra money to show for it. And that's a perfect example of what you said. Once you bring those stories to light, then you can see.
Well, and one of the scariest ththings to do when you start to get this good information, I'm going to pull something up for you, and I'm going to do a share screen, because I'll show you an example of this. I'm looking, I have another screen over here. It looks a bit weird. Let me see if I can pull it up. Yeah. So I'm going to be you'll see it's, I can't do that one. I have to do the other one. But it's really scary for entrepreneurs when you find out that you haven't necessarily had the right clients to then stop taking on those bad ones where you're underbidding your competitors. And it's like, oh man, I've gotten, and I'm going to show you here. I'll do a quick share screen.
Yeah.
I just pulled this up here. Here, you should be able to see my screen.
Yep, got it.
Okay, so there's some redacted data in here because obviously I have to be careful.
Right.
But like, imagine if you had this. So this is, you've got your income. Okay. You've got your cost of goods, and this is a marketing company, so their numbers look really big. It's not quite as big as it looks. And then this is what I was talking about, your gross profits. You'll see, if you take the income minus your cost of goods, you've got your gross profit, and it's rank ordered. Here's a perfect example. Look at this. So top one, I'll make it a bit bigger for you.
Yeah. For anybody that's listening to this, it's
right.
Your top four clients, your top 3 clients are making, that's your
almost everything.
Oh yeah. Totally.
And then you come down to the bottom and you're seeing like $12, $21, $26. By the time you invoice that, so like this company had made 200 gross revenue, gross contributions. So this is before your overhead costs, your office, your reception, that kind of thing. So a couple $100,000, right? You come back up to the top. The first 1, 2, 3, 4, 5, 6. That's 50, 70, 80, 90, 100. That's $120K.
Right.
Out of 200 and something in the first 6 customers. And if you're listening, you don't see it. This report is 2 pages long.
Yeah. That's
right. Yeah. So like, that's a story, right? And then, you can, and here's like, I was talking about pictures before, like here, like this. So this is like, imagine like this is the opposite of the COVID curve, right? This is it going flat, where each, you can see that based on how many customers you have, what percent of your profit you're making with the number of customers. So here you can see out of that looks like about, call it 80 customers, the first 10 are contributing like 60% of your profit.
Yeah.
You go to 80 or 75%, it's 25 of like a third of your customers are 75% of where you're making your money. So
Totally.
Why are you spending so much time not making money?
Yeah. Time, effort, energy, money on marketing to the wrong people, stress. Yeah.
Stress, right?
Totally.
And then, those ones at the bottom, like, and I asked you before, who complains the most? Who doesn't pay the most?
Yeah.
They're small customers because they can't afford it.
Yep.
So we're often going after their own customer. And so then you think, well, who's going to fill that? And you know what? I'd rather have my competitors doing busy work, spinning, just barely breaking even, or maybe breaking even with all of these customers that are too demanding, that aren't contributing enough. And it depends on the type of business you're in. I get it. Some businesses are more transactional, so there's a lot of smaller transactions. You have to get really good at making those uber efficient. Like there's no question if that's your model. And some models are like that. I'm not saying, but for trades, you think about, you can tell me about your business. Like, does this ring true for you?
Yeah, absolutely. Absolutely.
Yeah.
And then we go after like the ones that they can't get approved for financing, or they can't,
mm-hmm.
They want the cheapest, like they're calling 10 companies
mm-hmm.
to get to price shop. Like immediately I'm like, that's not our client. We'll do a sales call, but that's not our client. And, we're going to present everything that they need for the comfort of their home and to fix it properly. And they're like, whoa, that's way more expensive than anybody else. Like, but we're going to fix it right.
Yeah. So like, the model you have is just a high quality, but not cheap product. That's no different than us. And it's like and I kind of look at it like, you probably see other people do their work and you're shaking your head going like, how can you even charge for this? This is embarrassing.
Mm-hmm.
And like, and there's different strategies there. There's McDonald's, and then there's, pick your favorite steakhouse, right? Like people, there are buyers for all of that. And it's really a question of who do you want to be as the entrepreneur, and getting super clear on that. Because also, if you're trying to serve a high-end steak and serve McDonald's, chances are you're going to screw them both up.
Yep. So what we did,
if you're the McDonald's, do McDonald's.
Yeah,
McDonald's makes a lot of money. You can make money doing McDonald's. This isn't a critique of being a low-cost provider. That's a strategy, but you have to operate your entire
100%.
business aligned with that strategy. Don't try and be both. Destroy yourself.
That's what we did so I have 2 HVAC companies. One of them is the McDonald's version. And then and then Service Emperor is more of like a Ruth Chris or something like that, or a boutique restaurant.
You're getting me hungry. Yeah.
Yeah. Right. And so it's very much like, so Tristar is my other HVAC company, and Tristar, the guys are going to run 10 to 12 service calls a day. Whereas Service Emperor, they're only going to run 3 service calls a day. The guys run less service calls, higher ticket prices, but they're more involved with the client. They spend more time there. So, 3-4 service calls a day over an 8 to 10 hour period versus 12, maybe 15, and they're just running and gunning as fast as they can. Yeah. There's no relationship being
and nothing wrong with either of those models, but I love the fact that you've split them into 2 different completely organizations. And let me just sort of come back real quick on the accounting thing. And one other real challenge that's going to happen. So like, imagine rather than just doing a service call, you're doing full installations, right? And maybe it's a new building or whatever, and it's a big project. And, I'm going to take it, it's a high rise and you're doing multiple installations on different floors. So it takes 3 months to do the installation. Yeah. One of the other problems from the hygiene side, and this is going to happen for a lot of trades that are doing larger projects, is, let's say you're lucky enough that you get a deposit, right? It's $100,000 job and you get a $50,000 deposit. You know where I'm going, don't you?
Yeah. Mm-hmm.
Yeah. So a lot of people, what they'll do is they'll take that $50,000 deposit and call it income.
Yep.
Well, so that's a cash basis accounting, and then there's accrual accounting, and everybody hates cash versus accrual accounting, and it's confusing. But basically, let's say it's $100,000 job you do over 3 months, and you do a quarter of the work month 1, a quarter of the work month 2, and half of the work in month 3, and you finish it then, right? But you get 50 grand up front and month -1 before you start, and you get 50 grand on month 4 after you're finished. And so a lot of people will record 50 grand revenue in month -1 and 50 grand revenue in month 4, but all of the work happened in the middle.
Yeah.
What accrual accounting is going to do is it's going to say, we're not actually going to take any income. We'll take the cash. Always accept the cash.
Right.
Okay.
Yeah.
Get the cash in your bank. But we're not going to call it income until we actually do the work. And then we're going to, because we did a quarter of the work in month 1, we're going to take $25,000. We did a quarter of the work in month 2. That's another 25,000 of income. And then, maybe it's 20 grand of costs. That's our labor was 20 grand. Our materials was 20 grand, whatever. We're going to match that up. Then in month 3, we did 50%. So we're going to take 50 grand, even though we haven't even received that money. So whether you receive the money first or you don't receive the money till after, doesn't matter. Your income needs to happen when the work is done. That's how you're going to figure it out. And when you were talking about that, well, it says I made 50 grand, but there's no money in my account. That could be the warranty example you gave, or it could be that you've recorded a bunch of deposits where the work hasn't been done, or worse, you recorded the deposits last year, right? Your year end is December, and you got a nice fat check in December, and you're like, great, I made 50 grand. And then this year, now you had to do all the work associated with that, and you got no money.
Oh, yeah.
Well, like, I've seen all these weird timing differences. You're like, well, it was our busiest month ever and we lost money. Well, yeah, because you took the income 3 months ago when you didn't do any work.
Mm-hmm.
So that's sort of another like technical complication, which I don't expect. And here's the thing, my whole, and I'm not, the whole the idea in the book and what I'm offering in the book is, I don't expect you, the owner, to go and fix this. This is not what it's about. It's actually empowering the owners to know what to ask, to have some examples, to challenge their bookkeepers, to be empowered to know what questions to ask and why, and what to expect. What's a gold standard reporting package? Like I showed you a quick example here online of like, here's a report that you can go to your accountant and say, I want this report. And if they can't get it to you, find somebody that can.
Yeah.
Because there are accountants out there that can do this.
Absolutely. Absolutely.
Yeah.
Where do we find your book?
Amazon, of course. I'll do the Vanna White Entreprenumbers, the surprisingly simple path to financial clarity. And for the if you're looking at this live, that's actually not me. There's like a silhouette of kind of like it's supposed to be a half Superman, half $sign kind of. I like the graphic that somebody came up with, but it kind of looks like my silhouette. I'm
it does.
kind of a tall, thin guy. It's not, and I didn't even think about it. But for the record, for the ladies listening, I actually was looking at the graphic of having a guy, man and a woman back to back with that. They got too busy. So I'm not trying to be egotistical and only have a guy there. There's lots of great women entrepreneurs as well.
Absolutely.
So it's available on Amazon. If you Google it, you'll find it quick. And entreprenumbers.com, there's obviously a link there. And the other thing on entreprenumbers.com is there's a bunch of free downloads. So there's a sample reporting package that, again, it's like, here's something that's going to make it really easy. Here's the type of pictures, I'll do one more real quick screen share if I can, if you don't mind. But like, because so much of what I do is visual, I just thought I'd, come on. There we go.
Yeah.
Like a sample reporting package where it's like, okay, here's cash flow forecast. It's a picture. You can see, like, you don't have to be an accountant. Like, what do you see here, Tersh?
It's going to dip in May,
There you go. You've got a problem in May. Like, you don't have to be a rocket scientist. Here's another example, like net income. There's a lot going on here, but I'm just going to help you out for 2 seconds.
Bad. I mean, it's still...
If you look at just January, so this is the January report, right?
Uh-huh.
The yellow line is current month. The green line is last year at the same time, and the gray line is your budget, if you have a budget. We won't get into budget conversations today. The yellow line, is that higher or lower than last year?
Yellow line's higher.
Yellow line, is it higher or lower than budget?
Higher.
Okay. Are you doing better than budget in last year or worse?
Better.
So zero complications, zero confusion. Again, Here's the same thing on a year-to-date basis. So before we looked at just the month, now we're looking at how you're tracking over the year. You can, and I'm not going to make you go through each of these slides, but
Yeah.
again, your net income, you can see it. It's better than last year, better than budget. I know I'm on track. Great. Sales, same thing. And you can literally go through, and I'll stop sharing so I'm not doing a full presentation, but that's the kind of thing that I'm trying to help people see, that if you take this example reporting package, you take these pictures I just showed and go like, I want this. Literally in 3 minutes, you can understand your financials better than if you took an hour trying to decipher the P&L.
Yeah.
It shows the trends. It shows last year. It shows if you've done a budget. Again, we'll save that conversation.
We'll assume that you
and
did.
so that's, yeah. And so like, that's the type of thing. And so some of your bookkeepers are going to be able to do this and some aren't.
Mm-hmm.
And, and part of the other problem that I think is super important to share, and your guys will really get this, an accounting department's not unlike a job site, right? You're building a house, and I was in the construction business. You've got your general contractor, you got a bunch of sub trades, and depending on the size of the job, you got a couple laborers, right? They're hauling the cement, digging ditches, that kind of thing. The same sort of stack of people is in an accounting department, right? You've got your CFO, directors of finance. Below that, you've got your controllers, maybe assistant controller, and below that, you got the bookkeepers. And they all have different responsibilities and skills. And so a bookkeeper is kind of like the laborer on a job site. They're an important part of the project, but you wouldn't go to a laborer to build you a house, would you?
Right, exactly.
But we often, especially for smaller businesses, you've got 4, 6, 8, 10 employees, you can't afford a controller and a CFO. So you end up just going with a bookkeeper. That's exactly like hiring a laborer to build you a house.
Yeah.
There are some wonderful bookkeepers out here. This is not a shot at bookkeepers any more than it's a shot at laborers. And you need other skills. So bookkeepers may not have the skills to create this. So that's what that's one of the other problems. And so, again, I think I see you checking the time, and I'm checking the time too.
My phone rang over here.
Okay.
I had it silenced.
Okay, you're fine. And so Entreprenumbers is going to help guide the owners as to how do I ask and relate to my accounting department, knowing that I may have some shortfalls. Some of them may or may not be able to create these reports. Some of them may or may not be able to figure out profit. Dude, I have a call today with a new prospect and we do kind of like audits and free audits for people if they're, potential prospects, right? And so I was looking at their information. They have no cost of sales, meaning they've got nothing above the line that you were saying before, not one cost. That's not possible. And they think they're doing a good job with their accounting. Like they said, our hygiene is really good. And now I have to be the bearer of bad news and say, dude, you don't even have any cost of goods. Like no business has no cost of goods. It's not possible.
Right.
It's not possible. So something is really broken. So that's what Entreprenumbers is really designed to help tease that information out and really be a guide to help know what really great looks like. If you don't know what good looks like, you don't know how to get there.
Right.
If you know what good looks like, even if you may struggle to get there, or have to go through a bunch of different people to finally get someone who can deliver this for you, at least you know where you're going. You've got the map.
Absolutely. You know what questions to ask.
You're driving from Savannah to Seattle. If you've got a map, it still takes a long time, but at least you know which direction to go. If you don't have a map, if I go east, I'm going to hit the water, so I'm not going to do that. But other than that, I don't really know where to go.
Absolutely. So cool. Can they connect with you or learn more from you at the website?
Yeah, so entreprenumbers.com is one place you can find me. You can find me on LinkedIn. My last name is Sheinin, Sheinin, spelled in. Now you'll never forget it. And yeah, if you've got somebody who's really stuck or struggling or wants to have a chat, they can reach out to me, Spencer at shiftfinancial.co, not .com. Somebody booked it and wanted to, hold me for ransom
Been there.
14, thank you.
Yeah, been there.
And I said, not a chance. I just think that's dirty work and I'm not going to participate. So I went with .co. Shiftfinancial.co, Spencer at shiftfinancial.co. Feel free to shoot me an email. And if your first, I don't know, let me think about this. I don't know how big your audience is, but first half dozen people that reach out, I'm happy to do a free half-hour consulting. I'm happy to look at their books. I'm happy to just see what's going on. I'm happy to just have them ask me some questions. Yeah, that's just an offer out to my gift to your listeners. And if any of them are actually on QuickBooks, the other thing I can do, and there's a few kind of it depends in here, so I can't do it for everybody. Obviously, I only have so much capacity. We've developed our own reporting software. I hate the reporting that comes out of any accounting software. I showed you kind of a couple pictures there. If you're on QuickBooks, and we're happy to sign non-disclosures, we're in the business of seeing financial information, we can actually connect to our reporting software and show you the types of reports that you might be able to get if you have the right hygiene and that type of thing as well. So whether you use us or not, I don't care. I'm here to help. And you can take that report, go back to your accountant and say, give me this. So again, first half dozen or so people that reach in, but you got to be on QuickBooks because our software is connected to QuickBooks. Maybe Xero, but QuickBooks Online, yeah.
Okay.
Maybe Xero. Xero's got a couple of issues that I don't love. It's not a bad software. It's just it's hard to get as much detail out of Xero as you can get out of QuickBooks.
It's crazy. I was ignorant to the fact that there were other platforms out there other than QuickBooks, other than the CRMs or the
tons.
Yeah, that's crazy how much there's out there.
Yeah, so for our model, like what we did, and I just share this because I think you might find it interesting. We only take on clients using QuickBooks Online, and we'll convert from other formats to QuickBooks Online. Like we know how to do that. It's kind of like the Southwest Airlines model. They only have one type of plane. Their mechanics learn how to fix one type of plane. Their pilots learn how to fly one type of plane. Our accountants learn how to fly one type of accounting software. There are so many out there, and everybody's on a different one, that if our accountants were learning them all, like we wouldn't do as good a job. So kind of when you were talking about your high-end model, very niche, like this is our right customer, that's what we've done as well. Like we don't want to mess around and try and serve everybody. So I'm not just saying BS earlier. I'm actually living what I said we do. So we're very specific on who our right fit is for sure.
Cool, Spencer. Thank you so much for coming on the show and sharing everything. We didn't even get to talk about ultras, not much anyways, but next time we'll have to have you back.
It hurts. I'll just tell you, it hurts, and we can probably leave it at that.
It hurts me to watch it, so I can only imagine how bad it hurts you.
Yeah, man.
Cool, man. Well, I appreciate it, and thank you everybody that's listening or watching this episode of the Service Business Mastery Podcast. It's the podcast focused on service business owners, managers, and technicians who are considering becoming business owners themselves. If you have any questions, don't hesitate to reach out to Spencer or myself. And until next time, have a wonderful week.
Thanks, Darsh.
Thank you.